Well, hello there. Tyrone Jackson, the wealthy investor, bringing you the latest in stock market updates. If you like all of the information that I am giving you here in these instructional videos, be sure to click subscribe right now to this channel. That way you won't miss the next update. All right, this particular video, I want to talk to you about Facebook. Is now the time to buy Facebook shares? It's a question I've been getting a lot of lately, and I want to dive right in. I try to keep this stock market trading and investing thing as simple as possible so you can make money. So let me explain to you the part of the Facebook story which you may not be familiar with in plain simple terms. First of all, let's take a look at the stock's 52-week performance here in Yahoo Finance. You see it's been as low as $144.56. It's been as high as $195.32, but it is clearly off its high at 186.90. Now, this pullback off its high happens when we have something geopolitical that happens in the market. That's not necessarily bad because of Facebook stock. We've had the president tweeting a lot of things that Wall Street hasn't liked, and so this stock has clearly pulled back. I also want to show you something on the 5-year chart, which I always ask that you look at the long-term chart to see how Wall Street likes the stock. Now, the reason why a lot of people don't make a lot of money in the stock market is they don't realize this, that you and I have to invest in stocks that we like, and Wall Street has to like them simultaneously. Well, clearly in the last 5 years, the stock has gone from $19.41 and straight on up here. The revenues have been rising. Why have they been rising? Because Facebook is one of those few companies that's learned to monetize mobile. You know those ads you see in your feed? Well, now people are clicking on those ads and buying things on their mobile phone. So they've done a brilliant job. But this is what I really want to show you, and this is the 6-month chart. And notice how volatile the stock is. That upward trend is simply not there. And notice right here where the stock fell from 185 all the way down to 152. And a lot of people kept saying to me, Tyrone, is this the end? Okay, let me explain this to you. I'm sure you are aware of the Cambridge Analytical scandal in which people were capturing information not only from participants who played a role in Facebook surveys, but they also had software behind that also captured all of your friends and family's information if you took a part in this survey. All right. So what happened was a lot of people blame Facebook for, in part, the dissemination of misinformation that helped get Donald Trump elected. That is an outside political view, but you see that the stock dropped radically here. Now, what were we all waiting for? We were waiting for the first quarter earnings. Remember, publicly traded companies must release their earnings at the end of every quarter, January, February, March. Well, what did we learn in April 2018? That despite this scandal, Facebook's earnings were doing really, really well. Here's a quick recap. At the end of the quarter, Facebook had earned $11.9 billion in advertising revenue. Don't forget, that's from January to March, what we call Q1 revenue. Is that translates into $1.69 per share, which is very good. But you'll notice after the earnings came out, look at what happened to the stock, how it started to rise. We call that retracement. We had another quick pullback here. Mark Zuckerberg testified before the US and recently also in Europe, and bam, the stock has took off. Now, here's one thing I want you to remember, and this is why a financial education in the stock market is so important. When we look at this bounce here from 159 to this retracement, stock going back over its steps again, there's one thing a lot of investors miss, which will drive the stock price higher, that Facebook has committed to a $9 billion share buyback. So let me explain to you what that means. That means that the company is going to buy back its own shares in the marketplace and keep these shares in their coffers. When you buy back $9 billion worth of shares, do you know what that does to the float? It shrinks the float. It means that there are less shares available in the public domain to get your hands on, and that has correlated 98% of the time with a rise in the stock. So if these earnings stay strong and this $9 billion share buyback takes place over the next year, this stock will cross 200 quite nicely. Okay. Now you got to remember the big money in Facebook, since they're basically an online advertising outlet, will be made in the fourth quarter because it's still a viable place for retailers to sell their products during the Christmas season. Remember, when you're dealing with a company that's in online advertising, it's going to have a swell in revenue in the fourth quarter. This stock is going higher from here because of the earning and the share buyback that the company announced. Most of the media did not broadcast that. That's why I'm broadcasting it to you here, because I want you to choose the stocks with the greatest probability of going higher so your portfolio will rise. So again, stock slightly off its 52-week high, but that has to do with more geopolitical events. 5-year trend doing really, really well. And the retracement that has happened in the last 90 days tells us the stock is going higher, in part because of the earnings, but mostly because of the buyback. Now, here's what I'm going to say if you like owning stocks that make their money off of worldwide advertising. They're actually better companies to own than Facebook, in my view. And I cover them when you start your membership right here at WI Trade School. I'm not saying that there's anything wrong with Facebook shares, but at 182, 86, that gets really pricey. Why not follow the stocks that are better trends, that cost a little bit less, that also may also be participating in that fourth quarter rally on the advertising side? Here at WI Trade School, you can simply follow those trades. You can buy those stocks, and as you know, follow the $5 buy signals that I teach you all the time, because online advertising is not going away. Right? It is only generating more and more money. And I think you should own some of the other stocks that perform just as well or better than Facebook, but they can cost half the price. So start your membership here at WI Trade School. I'll be covering some more stocks in the upcoming weeks that have the highest probability of going higher. And they're great for you to hold for the long term. Okay, Tyrone Jackson, the Wealthy Investor, saying, I hope you enjoyed this video and you understand the significance of a share buyback as well as a revenue rise. Wonderful formula to have on a stock that you're holding for the long term. And with that, I'll see you soon. Once again, if you got something out of this video, make sure you click the subscribe button so that when I upload the next video on the next stock that I'll be reviewing, you'll simply get notified.